All right, all right. Good morning, good morning. I'm glad to see everybody here. We got a nice little crowd in here first thing in the morning after having a late evening at the university. So that's nice to see. We got a few people that came and showed up for us this morning. I know we were there late last night. We stayed. Some of you stayed after class, and we talked a little bit after class too. So nice to see you get up first thing in the morning and come and join us once again. All right. The first thing we want to do is we want to just kind of recap what we talked about yesterday. Yesterday we talked about the markets and we talked about the setups and the strategies, right? Count, measure, setup, trigger, and follow through. And that's kind of the syllabus of the class. That's what we're going to kind of focus our attention on. Count, measure, setup, trigger, and follow through. So that's really setting up a strategy, a trading strategy. Now, there was also a comment in class the other day that, oh, the computers are now trading for everybody. We have AI. We don't have to do this anymore. How's that going to happen? Is that going to ruin the markets? The quick answer, short answer is no. There's been computers trading the financial markets for 30 years. All right. Ever since I've been in the markets, there's been computer systems trading. All right. You're like, yeah, but those are computer systems that are not like AI. AI is so much smarter than those computer systems. No, actually, they're not. AI is not any smarter than the computer systems that have been trading. In fact, BlackRock is famous for one of the biggest, baddest, greatest, strongest, fanciest, neatest computer that's ever traded the stock market. And the stock market is still here. All right. And there's still other companies besides BlackRock. They are big, yes, they are a big firm, but they're not alone in this market. And again, the computers have been trading these things forever. As long as I've been around, computers have been trading these things. And so, is AI going to change any of that? Not really. What AI will do is it will help you do research on markets that you might want to invest in. But as far as executing trades, can the computer execute trades better than you? Yeah, can. That's why we use in track and trade. We have 3 states. We have total manual trading. We have what we call semi-automatic trading, and then we have full automated trading. So track and trade, the software that we're using in class, has that capability. It's called the autopilot, and you can turn on the autopilot and you can let it trade for you hands free. Turn it on and walk away and go eat eggs, and it'll trade for you. All right. So the computer has the ability, the software has the ability to do that if that's what you want. Is it how I like to trade? No, I like to be a little bit more picky. I like to be a little bit more strategic. I like to be a little bit more involved. So, do I like the full manual? No, I don't like the full manual either. And that's what we were kind of doing last night. Last night, we were just hitting, we were banging the buy button and banging the sell button. And we were just playing, just showing you that, hey, look how easy it is to get into the market. It's not hard to trade. You don't have to go dig post holes out in the hot sun, right? You just push a little button on the computer and you're trading. Now, whether you make money or lose money is the determination. And so that's where all the strategy comes in. Do we stay in the market? Do we get out? Do we go the other direction? We can make money either way, up or down, doesn't matter. And so the whole name of the game is, do you stay in the market long enough to let it go in a direction that's going to make you money, or do you get out and anticipate that it's going to go the other direction? And that's really what trading is all about. Everybody tries to make it more difficult than it really is. There's some great indicators that can help you. One of the indicators that we like is MACD. Another one of the indicators that we like is the ATR, which is laid over the top of the chart. These little yellow dots, they help us. Those little blue dots, they help us too. There's some other indicators. There's one called the bulls and bears, which is tied to the Fibonacci and Elliott Wave strategies, and that's the count and measure side of things. And so there's a number of things that we can use to help us make these trading decisions. And these trading decisions are all based around the market's making moves. And if the market's not moving, you don't make money. I have these little guys here, and these help me move the market. This is what I use to help move the market. So when I get in, what I do, if the market's not moving in my favor, I start stabbing this little guy right here, because that's how much power I have in making the market move in the direction that I want. I can't make the market move. All I can do is put my order in and hope that everybody else jumps into the market and makes the market move for me. Because I have no power to make the market move. All I can do is put my orders in and hope the market moves in the direction that I anticipate based on the setups and the triggers that I have. So I have these little guys, and if the market's not moving in my direction, I start stabbing them with a pin, and that makes the market move in my favor. And if I want the market to go up, I stab the green one. I got a green one here, and I stab the green one, and that makes the market go up. Or if I want the market to go down, I stab the black one. Makes the market go down. Excuse me. Hold on a second. I'm going to drink some tea. So that's the power we have to move the market as little tiny small traders. We're like flies on an elephant's ass. All right. All we can do is jump on and go for a ride. And so that's what we're here to do. We're just going to go for a ride. And how long is the elephant going to walk? We don't know. He's going to walk from one water hole to another, and that's about as far as we can go. Once he gets to the other water hole, he stops walking. Well, we want to get off. And so that's how we use these indicators to help us know, when the market's going to start and when it kind of stops. And so we kind of ride that little trend in between. And that's really what we're doing. And that's the name of the game. And if anybody tells you that they've got it all figured out and all you have to do is just do this one thing and you'll be rich beyond your wildest dreams, they're lying to you, or they're trying to sell you something. And this industry is clear full of sharks out there trying to sell you something. And I'm going to tell you this right now. If they're selling it, it ain't no good. All right. If they're selling you the magic bullet, the secret black box, all you have to do is just buy this thing from me and you will be rich beyond your wildest dreams. You're getting robbed. Why? Because if it was that good, they wouldn't sell it to you. Guaranteed. All right. All right. So what we're going to do is we're going to come in here and we're going to look at some different charts. Now, this is the stock market. And as I mentioned last night in class, the stock market requires you to have $25,000 in your account to day trade. And that's with a margin account. Now, if you don't have a margin account, you're doing a cash account, then the only thing you can trade is just you can only trade your money once, and then you have to wait till the next day to trade it again. Or it used to be 2 days. Let's change that to 1 day. So if you have $3,000 and you trade $3,000, you can make one trade, and then tomorrow you can make another trade. So the stock market really kind of sucks to day trade in unless you have a good size account like $30,000. But we're going to do that today. And then tomorrow at 1 o'clock in the afternoon, we're going to switch over. And we talked about last night the difference between the stock market and the futures market. And I showed you the futures market, and we pulled up the software. We played with it a little bit. And that was the one we used last night because that's the market that was open. So you can start in the futures market with a lot less money, trading out of Chicago versus out of New York, right? Two competing organizations. The stock exchange is not a government entity. They are they're companies, they're corporations. All right. And so they're competing against the guys in Chicago. They're competing against the guys in New York, and they want your attention. They want you to come and trade with them, or you go trade with them. And you trade different things, and there's different rules because there's different companies. You just need different software. One connects to New York and one connects to Chicago. And that's the difference. All right. But there's different rules. And in New York, they have the pattern day trading rules. You have to have about $30,000 in your account to day trade. Now, you don't have to have that to position trade. I mean, if you want to just go in and buy something and hold on to it for 6 months, there's no pattern day trading rules that apply to you. This is only for people who want to get in and out, in and out, in and out, in and out during the day and make money on these short runs. And as you saw, you don't have the leverage in the stock market that you do in the futures market. In the futures market, you can make a lot of money with a small investment. And in the stock market, it takes a large investment to make a small amount of money. Now, there are margin accounts in the stock market that give you some leverage, but it's usually like 2 to 1. And if you're lucky, you might be able to get 3 to 1, but it's usually 2 to 1. All right. So 2 to 1 means that $96 example that we made last night would be double. So twice that for $17,000 investment. All right. So that was kind of the example we used last night. So what we're going to do is I'm going to go through and show you some fun little tools that we use to decide what's a good market to day trade in the stock market. So if you do have that $30,000 and you want to day trade in the stock market, this is what we do. First thing I'm going to do is I'm going to come in here and I'm going to create a new portfolio and track and trade. And the way I do that, I just hit new up here on the portfolio side. And I come in and I'm going to call this our UTU day trading portfolio, if I could spell today. portfolio. U2U day trading portfolio. Let's day trading portfolio 1. All right, so we're going to come in here and we're going to start with a new screen. Now we've got some orders down here that have been sitting in the window, and that's all right. Just ignore those. Those are from another class. All right, hold on one second. All right, so what we're going to do is we're going to come over, and on the internet, there's a little tool that helps us know what's moving today. Now, remember, the name of the game when you're trading is what's moving today, what's making some moves. And there's this little program out there called FinViz. Now, I have no association with these guys. I just like them. All right, they have a nice little tool that helps us identify, and they've got little charts. It's not, if you can't afford, or you don't want a real live trading platform, which is what Track and Trade is. Track and Trade can actually trade, and it's where your account is and your account balance and all that stuff. All that stuff is in Track and Trade. If you just want little charts like this has no accounting, no trading, none of that. It's just a little charting program, and it's out on the internet, and it's free. But it's free because it pops ads up in your face constantly. It's very annoying. But if you do pay for it, then the ads go away. So nothing's really free in this world. All right, you have to pay for it one way or the other by having ads pop up in your face, or you give them some money and then they take the ads away. I like this little tool because it helps us with many different things. They've got a lot of the fundamentals in here that we like to look at when we're looking at longer term charts. They do have some of the dividends for those of us who like to trade dividends. But for day trading, one of the little tools they have is called this heat map. Right here. And you see this heat map? Oh, this is a bad heat map today because all the markets are down. Markets have been flushing out lately quite significantly, quite seriously. And we've all known that. We've all been prepared for it because we've done our count measure, set up, trigger, follow through. We've done our Fibonacci's and our Elliott waves. So we've known this is on its way. We knew this is coming. So don't freak out. It's just part of natural, normal market cycles and trends. All right, so that's part of what happens in the market. They go up and they go down, and they've been going up for a lot lately. So now it's time for them to go down a little bit. But this is what we call a heat map. So we're going to come in here and we're going to click on the heat map, and it's going to make it full screen here. And this tells you what everything's doing. Tells you what's going on. Microsoft's down 2% today. Nvidia's down 3%. Apple's down 0.5%. Amazon's down 3%. Tesla's down 2%. So it tells you Eli Lilly is up 0.5%, Walmart down about 20%. But there's another one. All right. If you look up here in the left-hand corner, you see one called Bubbles. And that's the one I like. I like Bubbles. So we come in here and we like to trade Bubbles. And we come in here and I change this from market cap to volume. See that little setting right there? I turn that over to volume. And then this tells us, now this is all the stocks in the S&P 500. And I like to come down and look at this, and this is the ones I like. You got the NASDAQ in here, you got the Dow, you got the Russell. Those are the 4 big indexes that you can trade in the futures market, all right? So you can day trade over in the futures market. Now, we're going to do this tomorrow afternoon at 1 o'clock. Today, we're going to focus. We might go look at the stock or the futures market. I got it pulled up in the background here, so we might look at it here if we got time. But mostly, we're going to try and focus on the stock market today. So these are all the big indexes, and S&P 500 is the one we're looking at. So these are 500 stocks. These are the 500 biggest, baddest stocks of the whole stock market, part of the S&P 500. And the bigger the circle, the more people that are trading it. So right here, we got this great big circle. This is NVIDIA. Lots of people are selling out their NVIDIA. All right, you can see it's been dropping over the last well, almost the whole month, the last 2 weeks at least. This thing's been going straight down. Lots of people selling out their NVIDIA today. But that's all right. They're just, buy the dip. Buy it when it's low. When it turns around, starts to go back up, that's when you buy it. But right now, it's flushing out. But we've got a couple up here that are going up, like Merck. Look at Merck. It's going up big. Oh, Merck's going up. Metatronics is going up. We've got some up here. FCX is going up. Freeport. We got Netflix is going up. Netflix got beat up a little bit because Elon Musk mentioned them and got mad at them for some movies they had about children, and he didn't like that. So that they got in trouble and flushed out quite a bit, but it looks like they're starting to come back a little bit. So let's go look at MRK. That's one that's starting to take off today. MRK. We're a little bit behind the 8 ball. We got started a little bit. 8 o'clock, the market opens, remember, at 7:30. So, and it's already 20 after 8. So we're about 45 minutes into the market. So let's go take a look at MRK. So we're going to come over here. We're just going to put in that symbol, MRK, pull it up. And there it is. That's what Merck and Company's been doing. Now they've been going pretty crappy all through here, but they've taken off here. They went one big run, and then they would counter trend. Remember, choppy, 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 smooth, 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 choppy, 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 smooth, smooth, smooth. So they went up, choppy, and then smooth again. So they're up running really hard. They're up here testing these previous highs of the previous market. So we're going to come down here to a 1 minute chart, and we're going to look at the day trade and see if there's not an opportunity to day trade this thing. Now, the first thing I like to do is I like to go back and look at the very first morning session. Now, the stock market, as you all know, because you were in my previous classes, opens up at 5 o'clock in the morning. All right. So at 5 o'clock in the morning, we have that morning bell, and that's when the morning bell actually opens. That's called the pre-market session. And it's like playing any board game. All right. You guys like to play board games? When you play a board game, you have rules, right? You open up the board game, you lift up the lid of the box, and you read the back of the box. It's got rules. And the rules of the game are, and they read down all the rules. That's how you play the game. Well, in the stock market, it's just a big game like that. It's just a big board game. And the rules are that anything you trade between the opening of 5 o'clock and 7:30, you have to only use limit orders. All right. There's a bunch of different order types. There's stops, there's limits, there's markets. But during this part of the day, during this part, from 5 until 7:30, you're only allowed to use limit orders. That's part of the game rules. Why did they do that? Well, because it's part of the game rules. If you didn't have rules, there wouldn't be a difference between this time session and the next time session. And it's the stock market. They like lots of rules. There's no rule like that in the futures market. Again, the futures market doesn't have all these stupid rules that the stock market has. So why did they do it? Well, it wouldn't be a game. You got a board game, and you got to play the game. And if you didn't have all these rules, you wouldn't have a game. So the futures market over there in Chicago, they're like, those guys over in New York, they have too many rules. Just throw all the rules out and just do what you want. We'll just give you a market. You can trade it however you want. We don't care. There's no pre-market session. There's no after-market session. There's none of that crap. Just trade. So that's one of the advantages of the futures market as well. They don't have all these silly rules. But in the stock market, that's one of the rules. All right, so let's turn on the cheat codes. Remember, we talked about those last night. That's called the Fibonacci. Now, most of you have probably at this point gone and got your software. I would encourage you to go get Track and Trade and download it. Whether that's the software you decide to keep or use or trade with, that's up to you. I'm just telling you, for the class, you can get it for free. And it's got live streaming quotes, and you got all the stuff that you need to trade for the next 2 weeks during class for free. And so that's nice. And then if you want to use it, you can use that software, or you can use any software you want. It's up to you. All right. So then we're going to come in here and see this. I got Fibonacci turned on right up in here in the software. Now it doesn't come up in there. You have to turn it on. So the way you do that in Track and Trade is you right click on this little handle right here, and it opens up a little right click menu. Remember last night I told you right click on everything, because right click menus are everywhere. So then we come in here and we say customize the toolbar. And then in this little window here, you can grab over here on the left-hand side, you're going to find the little HA. Now I've already moved mine over. So you click on it and you hit add, and it moves it over into that window right there. And then that's how you get Fibonacci up there like that. And then you can turn that on. Those are the cheat codes. Remember, we talked about those last night. So those are the cheat codes. The other way you can turn the cheat codes on is you can right click on the chart. Again, you have a right click menu on the chart. It's a big, long menu, has lots of things to choose from. We'll go through these and you'll understand them a little bit better. Don't worry about it. Seems complicated, but that's because this is the Ferrari of trading. You're going to have lots of capabilities. All right. In the beginning, we're just going to keep it very simple. We're not going to use all those tools. And then we're going to come in here and we're going to go to chart preferences right here. See that on the right click menu? And then there's Fibonacci right there. So you can turn it on right here as well. So that's kind of an easy way to turn it on if you don't have it in the button bar. All right. So now up here in the right-hand corner, you have all of your tabs. See all these little tabs? These tabs show you all the different things you have. This is your charts tab. This is your watch list tab. This is your trading tab. This is where you trade and your accounting windows are. These are your options. We'll do options the first week of December. In 2 weeks, we have an options class. We learn all about this one. These are your preferences for all the things that are in here, all the colors and all the tools and everything. All the preferences are in your preference tab. Any notes you want to take on what you're doing, And then you got your data tab that's got all the data that makes up the chart. All right. All right, so now we're back to our charts list. And our chart we have in here, we have one chart. We have Merck, and we have a 1 minute chart. We can also open up a daily chart. So we can have Merck in here, two different time frames. So now we have the daily chart and we have the 1 minute chart. This is the pre-market session. And what I like to do is I like to see the 5 o'clock session. What does the market do right out of the 5 o'clock session? This is what I call the call to arms. If you get this, that little bubbles tool is going to go to the moon right out of the gate at 5 o'clock in the morning. All right. It's going to start to shoot up. And then you'll see this, and then you'll look at it and you'll say, oh, this is going to be a good one. Now, you don't want to trade it until the 7:30 in the morning. All right. You and I mostly, we don't trade until 7:30. But that's when you're going to buy, all right? Because it took off at 5 o'clock. Well, that means it's going to probably take off at 7 o'clock. Does that mean it's always going to take off at 7 o'clock? No, but it's pretty darn good chance that it's going to. And if it doesn't, you just get right back out again. So you just lose a teeny little bit of money. But if it does, you just get in and you stay in the whole time. Now, this market's already started to rocket up. So that's kind of my secret little code, all right? I just gave you one of the best things I could tell you right there. That's one of the very best moneymaker things I can tell you. You watch that little 5 o'clock bell from this little thing here, and everything I just showed you, this is all free. This FinViz stuff, all this little scanner, you don't have to go buy scanners. There's lots of scanners out there that you can pay for. This scanner's free. Of course, if you don't want all the ads popping up in front of your face, you're going to have to pay a little bit for it. It's a couple $100 a year. But this is your little scanner, and this thing here is just awesome. It's as good as anything you can buy. All right. So you don't need all those scanners. You just come and use this little thing. It tells you what's going to take off, and it tells you at 5 o'clock in the morning. 5 o'clock in the morning, if that thing takes off like a rocket ship, you're not going to trade it during the pre-market session. Can if you want, when you get a little bit more sophisticated and a little bit more better at this, a little bit more better. You can come in here and you can trade this in the morning, and you can just take that first drive if you want to. But that's really what lets you know what the market's doing. That's kind of why it does it, actually, because they want you to come and trade Merck today. So it probably had some news release or some reason why the market took off like a rocket ship at 5 o'clock in the morning. But you watch that, and then when the real market opens, when you can start using all of your orders, market orders, limit orders, stop orders, you can use them all. You can use them right here. Start at 7:30 in the morning. This is the one. This is where you want to buy in and start going. And then, you know, it just goes from red to green. When it goes from red to green, you get in. Is it that? I mean, really, trading doesn't have to be rocket science. A lot of people want to make it harder than it is. And when you start making trading harder than it really is, that's when you start losing money. It doesn't have to be hard. Remember, 20% of everything we're going to do is how to trade. We just spend 20% of our time learning how to trade. We're going to spend 80% of our time when to trade. When to trade is way more important than how to trade. All right. So I can teach you how to trade in a heartbeat. What do? You come over here, and if you think the market's going to go up, you hit buy. If you think it's going to go down, you hit sell. You want to get out, you hit sell. You want to get in, you hit buy. That's how to trade. It can be that simple. The hardest time is when to trade. When do I hit that buy button? When do I hit that sell button? And I just told you the very best thing I can teach it right there. If you just did that one thing, you wouldn't have to do anything else. All right. Just look for the 5 o'clock bell to find a market that takes off on the 5 o'clock bell. Wait for it to come back down. And then at the 7 o'clock bell, you just do the same thing it did at the 5 o'clock bell. If it took off and ran up, well, you're going to anticipate it's going to take off and go up again. If it doesn't, well, then get right back out. Don't sit there and hang on to it. Don't be a bag holder. We call people who hold on to bad trades bag holders. All right. So don't be a bag holder. Just get in, and if it doesn't immediately go in your favor, just get right back out. You don't want to sit on something and lose a whole bunch of money hoping that it comes back. Hope is not an indicator, all right? Neither is prayer. All right. So that's that one. So if you would have been there at 7:30, you could say, well, it took off at 5 o'clock, and at 7:30, market's going to open. It's going to go from red to green. It goes to red. Oh, I think I'll get in. And if it didn't, if it started to go red, if it started to go green like this, and then turn around and start to go back down, I got to just emphasize this. Just get back out. Just get back out. There's lots of opportunities. You're going to have plenty of opportunities to get in the market. See? And then as it comes back up here, You can write it up, and you might have got out right there. That might have been where you got out. All right. That might have been a spot you got in here and you got out there. And the difference between where you got in and where you got out, that's your day trade. And that would have been on 100 shares, $163 win. All right. Jay says, that's funny. That's Jay says, my closet is clear full of bags full of hope. So your closet, I'm assuming, is your trading account, and it's clear full of hopeful bags. That's funny. So your trade would have probably been initially, if you're just doing a little day trade, you'd have probably got in right here, and you'd see that little red spot. That's probably where you'd have got out right there. So you just ride it up that little green trend. That's it. And then you say, but Lan, it keeps going. Well, if it goes from red to green again, get back in right there. And then you ride it up. Oh, well, it went red again. Okay, well, it's going green again. So, oh, that's going up again. So you're really just trading red to green. I mean, how much easier can it get? If it doesn't immediately go, just get back out. If it doesn't go up, get out. That's trading. Don't make it harder than it is. Yeah, we got indicators that kind of show us this stuff too. So this is a little this is called MACD. So what you're going to see is you're going to see the green and red down here. So if the market comes down like this, look, you got a red comes down like that. And then at the exact time we said we anticipated turning around at 7:30, look, it went green too. And it went green, 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 green. And then notice the little red thing right there corresponded with the little red thing right there. And it's just showing you kind of what's up here. It's just kind of a reflection of what you're seeing up here. Now, that's because we got these cheat codes on. This is what everybody else in the market's looking at. All right. Almost nobody has these cheat codes. You can go find them in some trading platforms, but most everybody doesn't use them. I don't know why they don't use them. It's like cheating. I turn them on. I like them. To me, they make the whole world happy. Make lots of money with them. But, you can only do what people want to do. And most people don't know about them because they've never taken my class. And so they don't see them. And so they don't use them. I like them. So I turn them on. And I think it makes a big difference. And they correspond almost exactly with that MACD. A lot of people use the MACD because they don't have the cheat codes. So they're down here looking at the MACD trying to decide when the market's turning red and green. And it's like, oh, I think it's going around. It might go here, it might go there. But if you just turn on the cheat codes, that makes all the difference in the world. I like them. So I think you should use them. I'm not going to tell you what to do. I'm here to tell you what I do because I'm not licensed to tell you what you should do. I'm only licensed to tell you what the capabilities of the software are and to teach you the strategies and to tell you what I do. I can't come in and tell you what to do. All right. You got to, those decisions you do, though, you make those decisions on your own. So you can lose money doing this because if you get in there and you don't get out, that's how you lose money. You get in, you say, well, I think the market's going to go up, and then it doesn't, and it goes down. You don't get out. That's how you lose money. And you lose a lot of money that way. I recommend you just lose little tiny money when you're wrong. Just admit it. You're wrong. You're not right every time. And then if the market doesn't go up in your favor and just sits there, get you one of these and start stabbing him in the neck. Stab him in the neck if the market doesn't go in your favor. And then if it starts to go down when it was supposed to go up, just get out and then stab this guy because you're angry. All right. You got to have a couple of these. These are the most important things that you can have when you're trading. You got to take your anger out on those little guys. All right. That's how it works. That's trading. All right. Let's go look at another market. Should we? This one's already taken off, going to the moon. Holy cow. Look at that thing go. Get in, Lan. Get in. Well, it's kind of high. I'll wait for a little pullback. Wait for a little red bars and then another green one. So another red bar, and when it gives me a little red bar and then a green one, that's when I'll get in. All right. And if you go over and you look on that little software program or that little paper that I gave you last night called Slides, you can see all these little things. Remember Slides? So you come in here and this is the supplement. All these little patterns are all these little patterns and how you trade them. All right. So this little book is all the plays. I gave you my playbook. All right. I'm the Chicago Bears, and the Chicago Bears, they play the Atlantic. What's another? You can tell I'm not a big football guy. Isn't there another team besides the Chicago Bears? There's got to be more than one team because the Chicago Bears have to have somebody to play. The Los Angeles Rams. Is that still a team? All right. The Los Angeles LA Rams are going to play the Chicago Bears. And we're the Chicago Bears, all right? Because we're out of Chicago and we're the Bears and the Bulls. Bulls and Bears out of Chicago, right? We got the basketball team and the football team. Bulls and Bears out of Chicago. That's because of the exchanges over there. A lot of people don't realize that. They're like, oh, we got the Chicago Bears and we got the Chicago Bulls, but they don't realize it's because of the Bulls and Bears. It's because of the big futures exchanges that are in Chicago. What does the New York have? Well, they have the Yankees, right? They don't have anything fun like the Bears and the Bulls. Why do you want to be out of New York? You don't. You want to be out of Chicago. Chicago's way superior. All right, so we got Chicago Bulls, and this is my playbook for my Chicago Bulls team, and I'm giving you my playbook. All right, and that's like top secret stuff. It's really hard to get your hands on the Chicago Bulls playbook. But here it is. I'm giving you my playbook. I'm the coach, and I dropped it on the ground, and you picked it up. And here's what you found. You found all my plays, all right? So here's how I do all this stuff. Now, can I teach you all this stuff in one day or even in just 3 days at the university? No, I can't. It's going to take me at least 4 days to teach you all this stuff, all right? Probably maybe 5. Just kidding. It's going to take a little while. So I don't expect you to learn every single thing. You don't have to you don't have to run all the plays every single day that are in the playbook. You don't have to run them all. You just learn one. Just learn one really good play, and you can do really well in this market just with one play. And the play I would recommend is the one I just mentioned. It's this one right here. All right. It's called the ABCD pattern. You see the market running up like that, and if it comes down, makes a couple of little red bars, the next green bar, break above the previous red, that's where you get in, right there, and ride it up the next leg. That's it. If you only did this one play, this is my favorite play. This is up the middle, right? This is the give it to the running back and let him run right up through the middle. It's just a running play. It's not a pass. It's just a running play. So the market goes up, pulls back, goes red, red. As soon as you get the first green, give it to the running back and let him run up through the middle of the field for a touchdown. See how many yardage you can get. All right, that's the name of the game. When do I know to get out, Lan? Well, when he gets tackled, he'll get tackled with a red bar. All right, and that's it. That's how you get out, because he gets another red bar. When he gets another red bar, well, he got tackled. Get out. So you ride the green until you get a red. That's it. Now, if you want to try and stay in longer, you say, well, Lan, maybe it'll only be 2 little reds and then he'll go green again. Okay, well, maybe a little jig and jog, right? Maybe it went up, made a little red, and then he went up again. You don't want to get out. That's fine too. That's your choice. Just put a stop order in there in case you get too much so you don't lose all the money that you just made. And we'll talk about that. But this is just one great big playbook, okay? It's all the plays. And it's a supplemental to the manual. This doesn't have any lessons in it. It doesn't teach you anything. It just shows you the plays. So really, without the manual, this is kind of, if you got a little bit of knowledge about the markets, you don't really need the manual because you already know all that stuff, but I doubt you do. So you ought to get the manual, and I gave you the manual. That was free too, right? Part of the class, not free, but part of the class. You paid for the class, so you got the manual. And then this is the supplemental. And in the supplemental is where we go into detail in all the plays. And so what happens is you really look for these different setups and triggers in the market. So when the market does this, I'm going to do this. When the market does this, I'm going to do this. When the market does this, I'm going to do this, right? So that's how you react to or play against the market. And you have all these little plays. And then we use these indicators to help us. But that's really what it's about. It's all about going from red to green. Oh, look, see, it's coming red again. Now, do we think it's going to turn around and start to go green again? Well, I don't know. It's kind of gone up. Nice little runs there. Let's see if it'll come down a little ways, and then maybe it'll go up again. So we just kind of watch it. But we're going to go look at something else in the meantime. All right. So we're going to go back over to our bubbles, and we'll go to bubbles and Merck and MDT. Let's go look at MDT. Wow, that thing really took off. That thing gapped up huge. MDT. So we're going to go over and we're going to go to MDT. Go over to charting, go into our portfolio, and we're going to pull up MDT. All right. Man, you haven't even placed an order yet. Well, I haven't had an opportunity. So, oh, wow, look at that market. So we'll go down to a 1-minute chart. We'll leave that daily chart open. We'll keep that too, just so we can go look at it. So that's the daily chart. That's the 1 minute chart. That's what everybody's looking at. Look at 5 o'clock. Look at 5 o'clock. It took off like a banshee out at 5 o'clock in the morning. That's our call to arms, right? 7:30 came along, and that's all it did. Oh, that's a little disappointing. That's a little disappointing. It took off at 5, but at 7, it just didn't. And that's probably because Merck got all the attention. Because Merck, oh, look, Merck's going green. Red to green. Do we think it's going to go again? I don't know if it's going to go again. There's our signal. Let's try it. We'll go in. Oh, let's get in with more than that. Let's get in with 100 shares. Okay, so now we got in. All right, red to green. It pulled back. We're going to put our stop in there right here, right behind that first green right there, just like that. Now that's a stop order. You see, I can just drag it right in there on the screen. That's what's really cool about this software. You can put your order right where you want it, and you can drag it and move it anywhere you want, anytime you want. And so we're just going to leave it right there. And if the market doesn't take off and go again right immediately in our favor and make a whole bunch more greens, then we'll just get out. No reason to stay in there. It's not going up. Sorry. Oh, it's my audio. All right. So that wasn't been off very long. I just barely took a drink. All right. Sorry about that. No wonder John was mad at me. So I took a drink of water and didn't want you to have to hear me drinking water. So this is all we're going to do is we're going to just sit here and watch this go up. We want it to break above this high point. This is called resistance. All right. It's kind of like the ceiling. The ceiling is resistance. And so it's going to go up in these little lines in here, telling you if it breaks above those lines, that's a good thing. We want to see it to break there and continue higher. All right. While it's doing that, we don't have to sit here and watch it. We can go look at something else. So we were going to go look at. We're going to go look at MDT. MDT is not doing anything. That was the 7 o'clock bell, and it ran for a little bit, right out of the 7 o'clock bell, just like it did at 5 o'clock. but then it died. Let's turn on the cheat codes. I don't think we're going to get much out of it. Look, it's pretty dead. But what if you wanted to trade it? What if you're like, I want to trade it anyway, Lan? I think it's going to go up. Well, go put your order in. It's really simple. All you have to do is just come in. Let's blow it up so we can see it a little better. I think it's going to go up, Lan. Right here. I think it's going to go up. Okay, well, planet's going up. It's got green bars. Maybe it'll go up. So you hit buy. So we go in with, let's see. So we get 100 of them. So we got 100 in there. And see that little yellow dot? That's where I'd put my stop to get out. So I'm going to put a stop in there, and I place it right on that little yellow dot. You don't have to place it on the yellow dot. You can put it down here and then tell the computer to put it on the yellow dot. So we're going to edit it. We're going to come over here, and I'm going to say I'm going to trail on the little yellow dot, which is the ATR. All right. So we're going to go trail on the ATR. You hit OK, and it'll jump it all by itself. Now it's auto trading. You wanted to have an auto trader? You want to have the computer trade for you? There you go. It's now trading for you. All right. So if the market keeps going up, we'll make money on the way up. And then this little yellow, the red order that's trailing those little yellow dots will just continue to trail up behind it. And if you go back and look, you can see the little yellow dot kind of follows down behind the market or up behind the market. All right. So all that has to happen is the market has to move. Now, if it comes down, that little yellow dot will hold that stop order there, and it'll just stop you out and get you out with a tiny little loss. But if it keeps going and keeps going up, well, that little yellow dot will just keep following up until the market turns around and hits it and gets you out. That's all there is to it. Pretty simple, right? And then we go find another one. Let's go see how this one's doing. Well, we're up $7, $6. We're up $6. It's kind of like trading the micros, right? Over in the stock market. Remember last night we traded the micros. We're making up $5, $6, $8, $20. The difference was we were putting in $100. Here we're putting in $17,000. Actually not. We're putting in $9,700. So $9,700 investment so far has made us $5. All right. So if you go to the futures market, you put in $100 to do the same thing. John, you got my attention, so I appreciate that. Hope you're not angry still. All right. So let's see. We got, oh, look, now we're down $10. It's not going like we hoped. Market's kind of slowing down here. That first hour of the morning, that's generally where you're going to get your trades. That's why I wanted to do it at 8 o'clock in the morning. We should have started at 7:30, but it's hard to be up 10 o'clock at night and roll out at 7:30 in the morning. I know. I used to start at 7:30 every morning, and I had nobody show up. So I pushed it out to 8 o'clock. But when you're trading this morning session, it's going to be good for you to get up and be up 7 o'clock looking at these markets, trying to find out which one you're going to be, or at least a quarter after 7. I mean, it doesn't take you long to look at and see your bubbles, right? You go see your bubbles. Where's bubbles? That's not bubbles. Where'd bubbles go? There's bubbles. All right. So you come over and you go to your bubbles, and it doesn't take you a long time to go and set up your bubbles. Where is bubbles? Oh, there she is. Okay. So you come over to bubbles and you just come in here and you can set that up. It's real simple. It's just the default settings. Only change that to volume. And then I like to generally look at the S&P 500 because most of the things that are in the NASDAQ are also in the S&P. Most things that are in the Dow are also in the S&P. Now, the Russell's going to be totally different. These are all the little penny stocks. So we can come and look at penny stock. Oh, my goodness, Olma in the penny stocks. Oh, and it's a $20 stock. Let's go look at Olma, see what Olma is doing. All right. Now, these are not going to be investments. You're not going to want to hang on to these things forever. These little penny stocks, you just trade them for one day when they pop and then get out. Doesn't mean they can't run. They certainly can, but usually they don't. We've got a whole portfolio of things of bag holders, right? Whole closet full of bags. Usually they come from the little small. Look at this thing's dead. Come on, buddy. Come on. I think it's going to flush out here in a second because if it doesn't go up, it usually like this, it goes sideways after this. And it's like it's not going up. Well, that means everybody's going to just dump it out. So it's going to fall right here. All right, we'll get stopped out. We'll watch. We'll just let it hit our stop order, but it's gonna probably start to flush at this point. All right. So we're going to come in here, and it's just, you can, once you sit here and look at these charts for 40 years, you kind of can read them without having to have indicators. You just kind of like, oh yeah, that's what they always do. So you'll get to that point. That won't take you 40 years, but after a couple months of just looking at the charts like this all the time, you just kind of know what they're going to do just by, oh, I've seen this a million times. This is what they always do. And you're not always right. I mean, sometimes you say, I think it's just going to do this, and then it does. But most of the time, no, sometimes they surprise you and go the other way. So that's kind of where that's at. Let's see. Let's go. Oh, what was that symbol? Now I forgot. It was Olma. Olma. Let's go look at Olma. OLMA. Holy cow, look at Olma. Nicely done, Olma. Olema. Olema Pharmaceuticals. Let's go down to a 1 minute chart and see if we can trade this baby. Holy cow. Let's see what happened at 5 o'clock this morning. There's your 5 o'clock morning call to arms. All right. So it gave you the alarm. It showed you 5 o'clock, said, hey, everybody come and look at me. Where a lot of people are going to be trading me today. So this is a Me Too market. You want to trade where everybody else is trading because that's what's going to push the market around, right? If nobody's trading it, it ain't going to go anywhere. So it's not one of these things like, I want to be a cipher in the snow. I want to go over there and be all by myself in this market that nobody's trading. That's not going to do you any good. You got to be where the market, where everybody's at, where all the traders are. And then you got to be the first one in. You got to be the first one to panic and get out. That's the name of the game. Panic first. Be the first one. All right. Get out early. See, look at that nice little 3-drive pattern right out of the 5 o'clock bell. Drive 1, drive 2, drive 3. That's usually what the market does. If it goes to a 4th drive, which it can, doesn't always stop at 3. It doesn't always go up to 3. It sometimes stops at 2. But it likes to go to those 3 drives all the time. That's count and measure. One of the things we're counting is those drives. How many drives? Drive 1, drive 2, drive 3. Here's drive 1, drive 2, drive 3. We're at the bottom of the 3rd drive on the way back down. So it went up 3 and it came down 3. All right, just like that. It does it all the time. Now it's starting over. Now what are we going to do? Turn on the cheat codes, and it's starting to run right here. It broke that little trend line right there. That's a mathematically calculated trend line. It broke it. We're a little bit late to the party, but let's go ahead and we'll put in our 100 shares. And now this is only trading at $20, so 100 shares is not nearly as much. We'll put in $500. We'll put in 600. There we go. All right, so we put in 600 shares at $20 a piece to try and make a little money here. And we're going to put our stop in because that's a lot of money at $20. We're going to, if it doesn't go, we're going to lose a bit of money too. See, we're already down $145. So we got a lot of money on the line here on this little $20 shares. You can make a lot more money trading the penny stocks, these little $20 shares. So we're going to come in here and put our stop in because if it doesn't keep going, we just want to get right back out, take our small loss. So we'll come in here. We got 500 shares. We're going to put the stop in right down under here. We'll just put it right under this level here. I'm going to put a little closer than those yellow dots because I want it to go. If it doesn't just immediately go, I'm just going to get right back out. So I'll put my stop right there. And then I'll just tell it, hey, if the yellow dots are working for us, let's just go ahead and trail on those yellow dots. We say, okay. Okay. So the yellow dots, when the yellow dots catch up to where I put my stop, if it keeps going, if this market starts to go, if it starts to go, those yellow dots will just follow up and get us out at the top. But it's got to go. How do I know it's going to go? I don't know. Just broke out. Gave us one of those patterns like we have in our pattern book, like in our football playbook. We might get tackled behind the line of scrimmage. We don't know. But what we're going to do now is we're going to start stabbing the green guy, right? Because that's the only power we got to make that market go up. Once we've made our decision to get in, we got no control over what's going to happen. All we can do is run the play, right? We might get tackled. We might make some yardage. But right now, we're going to stab this guy. Go, 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 go. And he's not working very good. He's not very strong today. All right. Not making it go up. So what are we going to do? We're going to go look at something else. Why this plays out. We put a lot of money on the line on this one. We're already down $300. Whew. That market better go, or we're going to take a loss. It looks like about $500 loss. All right, let's come back over here to Merck and see what it's doing. Merck's doing nothing. Metatronics. Oh, where did our stop go? Oh, I had a stop for 1 instead of a stop for 99. I'm stupid. Now I'm going to get mad at you, John, for not pointing that out. How come I only had to stop for one? Look, I'm at 99. I should have stopped for 100. Let's get out of this, baby. Hit exit chart. All right. I thought you could make money when you go down too, Lan. That's in the futures market. In the stock market, well, listen here. It says up here in the right-hand corner, see it says easy to borrow. In the stock market, there's a whole bunch of different rules for, again, more rules in the stock market. If you're going to take a short position, make money on the way down, you have to borrow the shares. So you have to pay interest on them. And if you're holding them while they pay dividends, you have to pay the dividends too. And you can only do ones that have this little marker up here in the right-hand corner called easy to borrow. So if you think the market's going to go down, you hit sell market, and it lets you sell it over here too. So you can make money on the way down as well. But you have to have easy to borrow, and it's going to cost you some money to do it. All right. You have to borrow the shares. If they don't have the shares to sell you, then you can't do it. So that's why it says easy to borrow. We don't have that in the futures market. You don't have to worry about all that crap in the futures market. If you want to go down, if you want to make money on the way down, just sell it first. That's all. There's no borrowing the shares. There's no interest you have to pay. There's no dividends you have to pay. There's none of that crap. All right, we got to put our stop in. This time we're going to put our stop in. We got in with 500. We're going to put a stop for 500, not a stop for 1. Don't make that mistake. Lane just made a mistake and lost his money. What usually makes you what usually loses you money is mistakes you make, not that you did something wrong or that you picked the wrong direction. We all pick the wrong direction on occasion. All right, we all pick the wrong direction on occasion. Markets sometimes just don't move; they just don't go anywhere. So you just have to get out when you're wrong. But making mistakes like what I did, where I had an order for 500 shares and I had to stop for 1 share. And that's because I went in with 99 because I did that on the other one. I only went in with 1 and then I wanted 99. So I added 99 more. But then when I put 1 in, I put it back to 1. And so when I put my stop, I only had quantity 1. So I wasn't paying attention to what I was doing over here. And that caused me to lose money. So again, errors like that, so, you may have errors on the baseball field, you have errors on the football field, you have errors on the stock trading field too. So sometimes you make errors, and that's usually what makes you lose yardage, lose money. All right, we're doing something here, right? We got something happening over here. Let's go see one of these is making us money. Oh no, it's not. How come we're making money? Oh look, it's coming down. This lousy little Olema didn't take off on that green bar. Let's go zoom into it, see what it's doing. Oh, Lemma's coming down. How come my stop? Where'd my stop go? Didn't I have a stop in there? How come my stop didn't get me out? Exit chart. How come my stop didn't get me out? Orders. Oh, Emma. I thought I put a stop in there. Merck is Merck's back at 99. What the heck is going on? Oh, this is the daily chart. Let's watch this and see what happens. Oh, look, I got a sell for 99 and I got a long for 100. There's another mistake. Let's kill that. And come back over here to trade. I got to pay more attention to what I'm doing here. Now let's put our stop in here. We're just going to put it underneath this line right here. Well, that should get us out. How come it didn't get us out over here? See, we took a short position and now it's turning going back. It's just chopping on sideways, just not doing anything. We kind of missed our opportunity in the 730 bail. This market's just dead. Dead. I want to see if that order fills. Come on. Hopefully you guys got the idea. Just something to get you started, all right? Just to get you started. And then we'll learn more. We're just on day 1. This is just first day of class. So today we're just kind of getting started and having fun, learning a little bit about the software, learning a little bit about some of the tools you can use. Just getting started. We got lots to go. Lots more to learn. Just playing and having fun with the software right now. Now, why did that not fill? That should have filled us right there. Oh, no, that's the short side. Okay, that's not. Okay, now we're making money on the way down. It's still falling. Let's go to Merck. Merck's not going up. It kind of died on us, didn't it? Let's turn on the volume. We got volume in here. Volume tells you how many people are participating. And you can see that the participation is going straight down. Nobody's participating. Where did everybody go? They all left. They all made their money. And then they got out and then went home. Once you make all your money, don't keep trading. You made all your money, you made a whole bunch of money. That's why everybody left. They made a whole bunch of money on the opening bell. They're done. First hour of the day, it's over. The ponies come out of the gate and away they ran and they made all their money and now they're all gone home. The only people who stick around and keep trading are those who lost money. It's usually the way it works. Tuesday morning, there it goes. Just starting to move a little bit, trying to get in there. Come on, little green bars, go up, green bars. Here, we can start stabbing our little guy again. All right, let's make it go up. Let's go look at MDT. It's down right now. Oh, we're short on this one. It's not doing anything either. It's just dead. Is there anything else that's more fun? Anything else moving right now? That one's kind of taking up all the oxygen. Let's take it out of the list. OLMA. If you put it down here in this little bottom list right here, it goes away. Now we can say, oh, Arvin. All right, Arvin. Let's go see what Arvin's doing. ARVN. ARVN. Let's go to a 1 minute chart on Arvin. It's doing the same thing. It's kind of just dancing sideways. It's lost all of its mojo. But let's look at 5 o'clock. There's 5 o'clock. There's your little 5 o'clock bell. And then what happened at 7:30 right here? No. It kind of didn't get a whole bunch of mojo out of there either. We're getting kind of that little first pullback. Let's try it. Okay, we'll go ahead. Get in there with 100 shares at $13 a share. And we're going to put our stop in. And I'm just going to put on the little yellow dot. So I'm going to take my stop, drop it here, edit, and then I'm going to trail on the ATR. There it goes, automatically trailing up on the ATR, on that little yellow dot. And that's all I have to do. If it keeps going, I make money. If it doesn't, I don't. MDT. This is our short position. And it's losing 35. So it started to go back up again. Is that trailing? Edit. Let's trail that on the ATR to the downside too. It'll trail down if the dots are above, and it'll trail up if the dots are below. Merck. Come on, Merck. Oh, our entry is right there. Our stop is still here. I'm going to tell this one to trail on the blue light. Is that blue light? The blue light, that's the parabolic SAR. We're going to make it go parabolic SAR. Oh, parabolic. Where's that one? PSAR right there. All right, so I turned the parabolic SAR blue. Okay, so it jumped up to that little dot there. If it comes back down and just hits that, it'll take us out. Oh, look, we're all green. Look, we're making $6 on Urban. We're making $42 on MDT. We're making $4 on our Merck. Come on, Merck, go up. Don't come down, stop us out. Quick, we need some help. Quick, call in the cavalry. Hit our stop and took us out. All right. Well, this one's fallen. It's going down. Irvine's. Irvine's going up slowly but surely. He's going up. Come on, Irvines. Let's go turn on some volume and see how he's doing. Picked up a little bit right there, but now it's dropped again. Let's go look and see if there's something else fun. Irvin, we got Veneta. It's not a very big circle. We like big circles, but big circles that are going up. We like big circles up here or big circles down here. Well, you got the big circles. They could move, right? There's plug. Got a big circle. Lots of people playing plug. Let's go look at plug power. PLUG. It's falling like a rock. Let's turn on the cheat codes. Ooh, look at all the topping tails and bottoming. These are furry. Look at these furry little trail of these things. That's rotten. We don't like to trade those kind of markets. See all those topping tails and bottoming tails? See all those little furry lines? It's a furry trade. We don't like to trade those. If it's furry like that, that's hard to trade. It means the market's going nowhere. It's got no decision. You like all the furries on one side. You like all the furries on top, no furries on bottom. That's a nice uptrend. Or all the furries on top, no furries on bottom. That's a downtrend. Or all the furries on the bottom, no furries on top. That's a downtrend. That's a hard market to trade right there. And if you turn off the cheat code, you can see it's just choppy. It's really choppy. It's not doing anything. So, well, we're making some money on our short position over here. Market keeps falling. We're up $100. Let's go see if there's something else we can. Knox. What about this one here? Wolfie. Let's go see Wolfie. Wolf, WULF. WULF. Go down to a 1 minute chart. Wolf. Terra Wolf. Got a nice little trend line there, a little wedge pattern up in there. That's another play, right? You guys all saw that. As soon as I turned it on, you're like, hey, Lan, that's one of your plays right out of the book. Generally what happens is that baby flushes out the bottom, right? When you get one of those, down it goes. So that's one of our little football plays, right? If we come over here, you're going to find that in here. Where is that football play? It's in here somewhere. Oh, there it was. I passed it too fast. There it is. With a little triangle formation. Now this one's the one we got's a little bit more of a, not this one. A little bit more of a wedge pattern. It's probably in the manual. Yeah, I think the wedges are in the manual. Come down here a little further. Then we get into options. We get into some other stuff. No, that one is in the. That one's in the manual. I have to go over to the manual on that one. It's not in the supplemental. All right. That's a wedge pattern. We should pull up the manual. I don't know where the manual is right now. I only have the supplemental pulled up. All right. So that's Wolfie. Oh, look at it go. Lan, why didn't you put your order in as soon as you saw it breaking? Well, it already broke. I was just going to watch and see. But just kind of doing what we thought anyway. At least we were right. Oh, look, we're out of everything. We got stopped out here. We got stopped out here. Got stopped out here. Nothing's moving for us. Oh, this one here. Old Emma took off. Were we in this? Or were we right in here? And we got stopped out. We got in up here, huh? We got in there, and then it went down, and now it's taken off. Just that's the kind of thing that happens to me all the time. I hate it when that happens. I get in just a little bit early. Got in here, and then it come down, stopped us out only to take off like a rocket ship. How many times has that happened to you? Every single time does that kind of thing. Little dirty tricks. Market plays dirty tricks on you. Remember, there's two teams playing here. There's your team and their team. They fake one way and go the other, just like a good running back. What can we do? Let's see. It's moving now. Let's see if it'll give us a couple red bars. If it'll give us a couple red bars and another green bar, we could try it. But right now, we just have to sit and watch because we missed it. It's making lower highs. Remember, definition of an uptrend is higher highs and higher lows. Definition of a downtrend is lower highs and lower lows. So right now, we're making higher highs and higher lows on each individual bar. So that's an uptrend. Plus, we're making higher highs on the trends themselves. So we got a high here, we got a higher here, and we got a higher here. So we're in an uptrend, right? So smooth, 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 choppy, 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 smooth, 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 choppy, 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 smooth, smooth, smooth. And that's 3 drives. So that's drive 1, drive 2, drive 3. And it's kind of ugly anyway. We'll see. Just let's watch it for a minute. Olema, Olema Pharmaceuticals. All these markets are kind of dying on us. Oh, look, see, it's coming right back into that. See how, remember I told you last night, I said, you get these triangle formations. The market likes to drop out one direction and come right back into the center. They'll use that as resistance. And oftentimes we'll buy right there. As soon as it comes up and touches that center line right there, or sell, because we're going to look for it to go short, break and fall back down again. All right, so we're going to go in. How much is this? $11. We'll go in with 100. If it touches that, you can sell it right there. Now it says easy to borrow, so I missed it a little bit slow to the button. I started talking. Easy to borrow, but that's okay. You can put a limit order in there too. We'll talk about all these different types of orders and how you can use them and what they do. We'll give you all the rules because you got to. Well, right now we're just playing with market orders, and that's just jump in, jump out. There's lots of other types of strategies you can use with orders. All right, so now we're going to anticipate this thing falling again. If it doesn't, we'll just get out again, or we can add a little bit more. If it goes up a little bit farther, we're gonna add a little bit more. It's called dollar cost averaging. We can do that too. See how well it works. Okay, so it went up, touched our target, our center line. Now we're looking for it to back off and fall again. Make a little ABC pattern, right? Little ABC, that little ABC pattern. Right. Flush down, buddy. Come on. Now, this is where you come in. This is a really important part of trading. You got to get your other little voodoo doll out of here. And this is where you start stabbing the black one. I didn't have a red one. I didn't have a red one. They had a green and a black. So black now means red. All right. Stab him, making the market go down. This guy will make the market go down. Come on, go down. It's the best I can do to make the market go down. It's all the power and authority I have to move the market once I get in. I can't make it go down. If it doesn't want to go down, it doesn't go down. This guy, he can make the market go down. He's got power that I don't have. All right, we're up $7. So far, we've made $75 today. I haven't had a real good runner yet. Total open profit, let's see. Wolfie's the only one that's open right now. Total open profit loss. Where's that P&L coming from? Oh, I got a whole bunch of other things that we've been playing with in other markets, in other classes. We just leave those there. Don't worry about them. We just worry about our own stuff. Closed positions. Oh, now it's coming back up against us. Look, you rotten little dog. Where are you going to get out if you're wrong? Well, it depends on whether you really think it's going to rise. You could put in some more. If it goes up there a little bit higher, you can put in some more. But we only want to do that like once or twice. Don't sit there and do that a whole bunch. At some point, you just have to say, I'm wrong. Get out. I'm wrong. I'm wrong. Get out. Lane, you're down $5. Get out. Well, give me a second. Don't rush me. Don't rush me. I don't want to be a bag holder. I ain't going to hold on to it. I'm just going to strategically see what's going on here. Jay's saying, what percentage do I use? I don't use percentages. I use areas of support and resistance, and I use mathematical modeling. So a lot of traders will say, well, I'm going to risk 20% on this trade. That's arbitrary. It means nothing. I look at where the market's been in the past. I look at past performance. Past performance is not necessarily indicative of future results, but it's the best we got. So what I do is I say, well, I've got areas of resistance and support, and I've got mathematical models, which are these little blue lights and the little yellow lights. And so those are my stop zones. I just say if it's not going to go, I just going to get right back out. I don't care about 20% or 30% or 5%. None of that means anything to me. It's completely irrelevant. I'm looking at areas of support and resistance. Where are the lines on the screen that I've drawn? Those are based on mathematical modeling. Again, everything we do is mathematical modeling. It's called technical analysis, right? So we want to analyze the market from a technical standpoint. And where those areas of support and resistance come in, those are your lines of resistance and support. And if the markets break those lines, then they're going to probably continue. If they go up and bounce off those lines, they'll probably flush back down. And that's kind of the idea of how this works, right? So we look for support on the bottom and resistance on the top. And then the breaking of those trend lines or the breaking of those price patterns, that's the amount of money, the risk that we'll take. So if we draw a price pattern in there and we've got an area of support or resistance, and the price and the distance between the entry trigger point, right, the setup and the trigger is too big to where the exit would be based on the resistance point, we don't take the trade because it's more than we want to risk. So we want to take trades that have low risk, low probability of, or high probability going in our favor, but a low risk. So that the tolerance that we're going to give them is not very much, but we have to give them enough room to move, or else if the market just sits there and moves for a little while, it'll take us, we'll just keep jumping in and out, in and out, in and out, and that's no good either. So we got to risk enough. So we got to put our orders to get out above the areas of support or below the areas of resistance, right? Resistance and support. So I do it all based on mathematical modeling. I don't ever pay any attention to say, oh, 20% risk on this or 10% risk on that. I don't do any of that, because that's just arbitrary, and I don't like arbitrary. So like right in here, I'll show you, just give you a little example of that. Let's blow this up a little bit. So let's say we're short on this thing. Where would we get out on this thing now? And this thing's coming up into a little pennant formation. All right, it's making a little pattern in here. It's coming into a little pennant like this. And I kind of drew that funny. Let's try it again. All right, it's making this little pennant formation, a little pattern like that. I grab this little point out here, and it's not going to let me know that I got it in the wrong spot. All right, so see, it's making kind of this little pattern like this. It's kind of a little stubby point. And so the market's coming in like this. You can see the resistance across the top. You got all these little price points across here that the market's hitting against. It's bouncing up against this area of resistance. So if it breaks above that, traditionally speaking, you know, you broke your area of resistance and you're short, you want to just get out. So that's where you'd put your stop. You'd put it just above this area of resistance right here. As long as it stays below that, we'd stay in. So we're short with 100. So we're going to buy 100 and we're going to put a stop order above. We just put it above that little area of support right up in there, or the resistance right in here. See this little bar right here that we're in? I just put it right above there. So what percentage is that? I don't know. I haven't got any clue. I don't really even care what percentage it is. It's just where the market, if it goes up there and breaks that, it's probably going to go higher, and I'm just going to get out. I was wrong. All right. So at that point, that's how I know I'm wrong. Well, you thought it was going to go down out of this triangle. You thought it was going to go this way, and it didn't. It went that way. So I just determined where I'm wrong, and that's where I get out. I'm not wrong until it breaks that line right there. Hope that helps, Jay. And that's why I use these little dots too. So once the market starts to move in your favor, these little dots will follow up. And that can be a percentage. You come in here and you can see this is a ATR period is 1 and the stop factor is 1. So is it 1%? No, not really. It's a percentage behind the market. So it'll trail up behind the market. And you can adjust this. I like to generally, you know, if you want it to be a little bit more aggressive, you can pull those little dots in tighter, or you want to hold it back a little bit further. You hold it back a little bit further. You just move those dots to where you want them. So where do you want them? Well, I want them kind of right behind the tails. So if the tails are dropping, I want it right behind the tail. So it crosses over those little yellow dots, and that's where it's going to get me out. Now I'm short, so this is looking like it wants to go long again. But again, I'm not wrong until it breaks above this area of resistance. Now this resistance is on a downslope. So I've got it above this bar right here, the entry bar. And so we'll just stay in until it breaks above the entry bar. But I could bring that down a little bit closer, just slide it down here, right where that little line is, right? That area of resistance line. And if it touches that, then I'll get out. Just say, oh, look, well, I was wrong. I thought it was going to go down, and it didn't. So take my lumps. But when I'm trailing with a trailing stop on those yellow dots or on the blue dots, you can adjust them. You can just, how tight do you want them? You know, is it a percentage? Yeah, mathematically, it's kind of probably some sort of percentage. But for me, it's areas of support and resistance. It's all about support and resistance, where the price has been, where the trends are. So as long as this thing stays below that natural trend line, I'm going to stay in. That little natural trend line is the topping of that triangle wedge. And it's kind of ugly down here on the bottom side, but we're looking for it to break out the bottom. We just need the market to move in one direction or the other, and we need to be there for it when it is. The market's just, it's made some moves, just not while we are in it. Every time we get in it, it goes sideways. We're starting to get a little bit of movement here. We're up $6. There we go. Now we're making some money. $9. How big of an investment do we have in here? 100 times, what was the share price? $11. So we don't have very much money in here. $1,000. $11 times 100. $1,100. So we're up $9. All right, it's moving in our favor. So now what we can do is we can say, okay, we got the little yellow dot up there now. Let's get rid of all of our drawings. So we got the little yellow dot up there now. See, it's above it right there. Can you see it? It's right there. There it is. So we got the little yellow dot. So now we can tell the order. I can just come in here and say edit the order. And I can come in here and I can trail on the little yellow dot, which is the ATR. Hit OK. Now it's going to move down with the market on that little yellow dot. Now is the little yellow dot where I want it? Is it far enough back? Is it close enough or whatever? I can move it. Of course, if I move the little yellow dot, the order is not going to sit there and jump up and down. It'll only jump forward. It doesn't jump backwards. So if I move it backwards, it'll just sit there where it's at and then wait for the yellow dot to catch up. And that's by design. That's the way it's supposed to work. So now if that market just keeps falling, we'll just keep making money. And we'll just let it go until it crosses the yellow dots. When it crosses the yellow dots, it takes us out. We can only give as much money as it'll give us. Come on, little guy, keep falling. Give us more money. Give us more money. This is all the power you've got to get more money. I want more money. Okay, well, that's all the power you've got to move the market. You can't make the market move. All you can do is just play what it's going to give you. And it's not going to go down. I don't want to do it. The market's dead. Let's go find something else. Where did our little, there he is, right there. Bubbles. GSM. Nothing's really moving. We got to find a big Wolfie. We looked at Wolfie. Mara. Look at that big drop in Mara. And now it's got one day up. What's this one? Let's go back and look at the S&P 500 again. We all looked at all these. AMD's flushing down. NVIDIA's flushing. But it looks like it's popping back up. Microsoft dropped like a rock today. Palantir. Let's go look at Palantir. PLTR. I've made a lot of money on Palantir. Look at it flush. Okay, turn on the cheat codes. Ooh, lots of hairy, lots of hairy, what are those things? Candlesticks. Lots of hairy candlesticks today. Okay, it's gone down. It's got a little green one. Starting to go down again. Another red one. Got easy to borrow. You can take a short position on it right there. Got the down arrows. Got the red. You just take a small loss or a small risk to the yellow dot. That's all you'd risk if it doesn't keep falling. Get a couple little red bars here in a downtrend. See, it's in a downtrend. You know it's in a downtrend because it's going down, right? So now we're getting a couple little bars on the way back. So the first red bar, we'll take a short position. See, it goes choppy, 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 smooth. Choppy, 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 smooth. Choppy, 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 smooth. So you can see it's had 1 smooth, 2 smooths, 3 smooths. Oh, looks like it wants to reverse. Let's see how it goes against this trend right here. People are starting to buy it up. Look at that. Now you don't want to take the first one because we're still in downtrend. Wait for it to go up like this. Wait for it to go up and then give you a couple of reds. 2 reds, first green. That's the one you want to take right there. All right. You don't take this one. This is too soon. Still in a downtrend. Look at that. 3 drives. Drive 1, drive 2, drive 3. 1, 2, 3. This one actually had 4. 1, 2. And then this went the other direction. So those don't count. 1, 2, 3. It's starting to go up. Let's see if it's going to break this. Hold. We'll watch Palantir for a minute. And we'll call it a day. We've not had a lot of luck today. No markets really took off and moved for us. We were a little bit late to the party. Most of them moved right out at 7:30. Tomorrow at 1 o'clock in the afternoon, we're going to trade the futures market. I have the futures market up. We were going to possibly take a look at it. There's the futures market. We go look at a 1-minute chart over here, and you can see we might have had a little bit better luck over here. You just go from green light, right? Just ride the reds and greens with the little lights in there. That's what you do. But we're going to do that tomorrow. Tomorrow at 1 o'clock in the afternoon, power hour, the last hour of the day, from 1 until 2. I said 2 o'clock last night. It's not. It's 1 o'clock. 1 o'clock for us is power hour. We got another order on? We do. We got something else going on over here. No, we don't. We can't get anything going today, can we? We'll go trade the futures market tomorrow. This is stock market stuff. This is how you trade the stock market. You got to catch a trend, though. Okay, we're making up. Okay, it looks like it wants to start to go bullish again. We got one more resistance point right here. That's the previous high right there. So that's kind of a little target. It broke both the mathematical models. We got 1, 2, 3, 4 bars. That's usually where we turn around and get a red bar. Okay, it touched it. Look at that. Okay, broke through. Now we need a couple red bars. Just 2 red bars. 1, maybe 2 red bars. We'll get a green bar, and that's where we'll get the next run. We'll get that one. I'd have taken that one, Lan. Well, good. I'm glad you would have taken that one. I didn't take that one. That was the first reversal. We got to wait for the little ABC bottom pattern. See, this is called a head and shoulders formation. Left shoulder, neckline, head, Come up here. We broke this nice little head up here, right shoulder. We got to get at the little neckline. We got to get the right shoulder down in here. Right shoulder needs to come back down and give us an opportunity. Sometimes it doesn't. Sometimes market just goes to the moon and you miss it. But I wanted to get 2 little red bars in here and then go to the next one. It's not my pattern. Come on, give me my 2 red bars. I want to play. Man, this market is just taking straight off. We need a couple of red bars. Let's go look at something else while we're waiting for that to pull back. Let's see. NVIDIA. Let's go look at NVIDIA or Microsoft. We'll go look at NVIDIA. There we go. It hit the VWAP. Went to the VWAP. Volume weighted average price line. That's what that is. They use that as like a rubber band. The market likes to go up and touch it. Okay, now it's going to flush back down. You could take a short position right there. But since I had such a nice little run here, we're going to assume that we're going to get maybe 1 or 2 red bars, and then we can go for another run up. Is that what it's going to do? I don't know. It's a play we're going to run. Football, right? We're going to play against the defense. We're off. We're going to go on offense here in just a minute. See if we can't catch the market going up one more time. So in the meantime, while we're waiting for that, we're going to look at NVIDIA. NVDA. Not really doing anything fun here. Long trend like this. Little wedge pattern. Breaking out the top, just like Palantir right now. It's on a little bit of a run. We want to see it pull back, give us a couple red bars. Let's close out some of this. We're not watching Arvon anymore. We're going to get rid of him. I've only got 1 monitor that I can project, so I'm not doing anything with this guy. This guy died. Merck. Merck's trying to go back up. Again, we need to do the same thing. We need to see a nice little 4 or 5 bar run, a couple red bars, first green bar, and then we could anticipate that might go up. We'll hang on to that one. Hang on to this one. Oma, nope, you're gone, Oma. Palantir. Oh my goodness. It got a little wedge pattern in there and it's taken off again. No red bars. Plug, it's dead. No power in plug. Wolfie. Wolfie's doing something. Wolfie's trying. Let's look at all 4 of these. I want to bring 4 so we can see all these at once. Let's get rid of this one. Delete that one. There, now we can see all 4 at one time. Get this, shrink this down. We don't only see that. There we go. Whew. NVIDIA and Palantir just decided to take off like rocket ships. Got to get a little pullback. Come on, guys. Terra Wolfie. Wolfie's doing the same thing. Trying to take off for us. There's our little pullback on NVIDIA. There's our little pullback on Palantir. All right, that's what we're looking for. Come on, we got to catch something. Something's got to move for us today. We got to get some kind of a little play in here. All right. There's NVIDIA. There's 2 bars on NVIDIA. There's 2 bars on Palantir. All right, we need to get this thing going now. Now you can be aggressive if you want to. And you can come down here and you can say, look, I think this market's going to turn and go back up. So I'm going to put 100 shares on right here. If it'll come down and grab those, I'll go long right there. That's a little bit more aggressive strategy. You can put another 100 down here if it goes down a little farther. And you can grab a couple in anticipation of it, grabbing a couple of these and going back up. That's a little more aggressive. You don't want to do that. Just wait for it to turn and go back up. All right. Here, this one, Merck's starting to come down too. Wolfie's still on a run. Now, here we go. Okay, we got a green bar coming in here on Palantir. Oh, there, we just a little bit too slow. We should have had our automated system in there. But we're just doing manual today. We could have gone a little faster if it had been automated. Okay, now we got in there with 100 shares on Palantir. Let's go put a stop in. We're just going to put it right down. Oh, wrong chart. You got to make sure when you got multiple charts, you got to have the chart selected you're working on. Okay, we're going to anticipate a rise in price in Palantir. Does it mean it's going to go up? No, not necessarily. Just because it got a pattern, it doesn't mean that it's going to follow through. So, but we're going to play it as if we are. We're going to put our stop right here on the little yellow dots. Okay. We're going to come in here, edit. We're going to just trail up on the yellow dots. There you go. Now, if it'll take off and run to the moon, we'll be in good shape. Same thing here. We're going to wait for a second, see if it's going to go. We could put a limit order in down here and catch it on the way down. That's catching a falling knife is what that's called. We don't generally like to do that. Like the first green. We got a green bar. Now we just need it to take off and go again. Come on, buddy. Play nice today. We got people watching. Okay. We got people watching. You got to play nice at least once for me today. Okay, we got this thing coming down. We got to get a green bar in NVIDIA. Then we can put an order in on that one. It's right there playing with the yellow dots. Come on, Palantir. I'm going to pull out the voodoo doll here in a second. If you're not nice to me, pull out the big guns. All right, there we go. Oh, here we go. Let's put in 100 shares on this one. Stop. Put our stop in here. All right. Edit. Put that in on trail ATR. That's all there is to it. All right. Now all we can do from this point on is stab our voodoo doll. Go, 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 go. Be a cheerleader from the sidelines because that's all you can do once you get your orders in there. Come on, buddy. Come on. I keep telling you, this is not gambling. This is a carnival game. All right. Trading is not gambling. It's a carnival game. You're playing a carnival game. Each one of these little carnival games is a tent that you're in. You're going to throw darts. You're going to, throw a basketball hoop, or you're going to throw a baseball into an apple basket. You can get good at it. It's a skill that you can learn. It's not gambling. You have the exact same odds that are always stacked against you every single time you go, right? You go down to Las Vegas, the odds are against you every single time. You every time you throw a card down on the table, every time you spin a wheel, every time you pull a handle, the odds are against you that you're going to win. That's why I don't call trading. Trading is not gambling. Trading is a carnival game. You can go to the carnival and you can win the big panda because you get the skills that it takes to win the big panda. You can practice and practice. And yes, the odds are against you. They've stacked the odds against you, just like trading. The odds are always against you to win. But you can put the odds in your favor. And it's a skill that you can learn. And so it's a carnival game. It's not a gamble. And we're just here to, and some days you win a big panda, some days you win a little bear, and sometimes you get the little plastic frog, and sometimes you lose your money. That's the way the game plays. Today, I don't think we're going to have much of maybe all we're going to get is a plastic frog today. I don't think we're even going to get a little fluffy bear. We might end up this day with a plastic frog. Maybe we can get the rubber frog in the carnival game. All right, we're doing okay. We're up $31 on this one. We're up $59 on this one. All right, markets are starting to move. Come on, babies. Come on, let's go. Let's go. Let's go. I have no patience. I wanted to move fast. That's why I like the futures market. Come on, rock and roll. Now, we're still not making money. I mean, we're making money. We can take our profits off right now. But our stop, our trailing stop on that little yellow dot is still on both of these orders behind our entry point. So if we wait for ourselves to get stopped out, right? Oh, that down there on Palantir. Let's take these bigger. Down there on Palantir, our yellow dot just barely went above our entry point. So we're in good shape there. Or at least we're not going to lose any money on that one. All right, we're at break even. But this one still hasn't, NVIDIA, our yellow dot is still behind our entry point. So we haven't even got to break even yet on this one. But Palantir's starting to move for us. All right, we're getting a little motion here. Palantir has at least got us to break even. Scoot the yellow dot in closer, Lan. We can do that. We can come over here. I'm going to bring it full screen so we can get the ATR. We can bring that little dot in closer. Just scoot this down just like that. See that? Market's moving pretty strong. So scoot those dots up closer. There we go. See that? Now if the market comes down and breaks that little yellow dot, which I put really close, probably too close, then it'll take our profits. Let's go see what else is happening over here. This one still haven't made it to break even. Move your stop in closer, Lan. You can do that. It's all up to you. Bring those little yellow dots in closer. Don't want to get them too close. Get them too close, you get stopped out just as the market takes off and goes again. All right, there we go. Come on. All right. We're moving. Finally caught something. Finally caught a runner. There it goes. NVIDIA's going. Now we got some resistance up here. Remember, these areas of previous resistance up in here. So it's going to go up there and have a hard time breaking through those. This one here just broke through. So Palantir just broke through the resistance point right here. That's that previous high. See, went up and hit it. Oftentimes we'll put a limit order up there and take some profits off. I didn't do it this time because we're just playing straight up. But you can come in and say, well, you know, if it goes up there and tests that again, we got 100 shares on. Let's take 50 of them off. So we can come in here and put in 50. And we just put a limit order up there like that. Oh, we got to be on the right order. I'm on the wrong chart. This chart. Limit order of 50. We put that up there. And we'll say if it, why is it not letting sell order of shares of current long position? Please review. Oh, what did I do? Oh, because more rules in the stock market. You can tell I come from the futures market. In the futures market, I could put a limit order up there. Stock market, I can't. Why? Because I got a trailing stop for 100. Oh, you can't have a trailing stop for 100 and put a limit order to take profits in the stock market. You can only do that in the futures market. So what I'd have to do is reduce the sell, the 50, and then I wouldn't be protected to the downside to take my limit order on the top side. just more stupid rules that you have in the stock market that we don't have in the futures market. So I can't put that limit order up there over here in the stock market. So if it goes up there and takes, I'm gonna have to do it manually, take some profits off. But we're okay. We need that little dot to the market keep going. We're doing okay. We picked up some nice runners. That's what you're looking for. So you kind of sit there and you notice the whole day we sit there and put our orders in. If we're wrong, we just get back out, right? Little tiny losses. But then when you catch one, now you're in good. You're making money. These are really good markets too, NVIDIA and Palantir. So they're investable markets. These are markets you could actually invest in. So if you wanted to, you could be a bag holder on these. Once you get into the market, you don't have to sit here and trail up. You don't have to take a little day trade, a little scalp out of the market. You could put this down here at your break even and just say, okay, I'm in Palantir. I'm going to stay in this thing for the next 6 years if you want to. I mean, if that's the kind of trader you want to be. But this is how you'd get into a position like this too, right? But we're just day traders, so we want to eventually get out and just take our profits. We don't want to have to hang on to this thing. But if you did want to hang on to it, now you have that choice. You can do that because you're in profitably. So all we're going to do is let them go until they cross over the yellow dot, and then we get out. But Len, you're going to miss everything above the yellow dot. Well, that's true. I don't know how far it's going to go. This little guy's not going to tell me. Come on. How high is it going to go so I know the exact talk to get out? He's like, I don't know. I'm not going to tell you if I did. Secret. So we don't know where the top is. So we're just going to do our best. And the best we can do is trail up on those little yellow dots. And when it turns around and comes back down, that's where we get out. That's called the profit box. You'll hear me talk about the profit box a lot. All right. The profit box is from where you can get in to where you get out, not the high and the low of the trend. In fact, here's a profit box. Let me draw you one right now. From the entry on the yellow dot to the exit of the yellow dot, that's the profit box. That's how much profit you can make. The trend box is from the top of the trend to the bottom of the trend down here. Look how much bigger the trend box is compared to the profit box. You can only make the money from where you get in to where you get out. Unless you start trying to take money earlier, like right now. It's like, well, let's get out right now. It's up higher. We'll try and take part of the trend box. But maybe that's not the top of the trend. You get out. Then what if it keeps going? So you got the profit box, which is the entry. Those are the yellow dots to the exit of the yellow dots. The trend box, which is the top of the trend to the bottom of the trend. The trend box is a lot bigger. The trend box is a lot bigger than the profit box. So you need markets that are running because you can only get the $89. You can't get the $221. People are always trying to get the $221, but then you sacrifice if the profit box gets bigger and you just take the trend box. You don't know how big the trend box is going to be. You don't know, right? So you just let it go. And sometimes you catch a nice one, like today, we're catching a nice one. And that's the little ABC pattern. Now, what we do is we oftentimes will measure from the bottom of this trend to the top of this trend, and then we'll say, well, the market will probably do the same thing. 100% would be right here. So if it goes right up to here, that would be 100%. That would be exactly the same distance from the low of this to the high of this, from the low of this to the high of this. Markets don't generally like to do 100%. They like to do 90%. So I draw 90% in there. So if it hits 90%, I'll oftentimes take profits off at 90% because that's usually the top of the trend box. Doesn't mean it can't go higher. It certainly can. We got other numbers up here that the market likes to go to. 130.9 is the golden ratio on the projection side. So oftentimes you'll get it up in there. Oh, we just got stopped out on the Palantir. Palantir hit our yellow box. We took our profits off. But we're still in up here on NVIDIA. But NVIDIA hit the 90%er. So oftentimes you'll take profits at 90%. How'd you do that, Lan? I'll show you. I'll teach you. That's part of our class. Count, measure, set up, trigger, follow through. All we're doing today is we're just We're learning the 20%er. We're just, how do you put orders in? Did you do that trailing thing? How do you do some of that stuff? And then what are some of these patterns that we're going to look at? Palantir looks like it's getting ready to go again. It's got another little red bar. It's got a green bar. It's up here at the top. It's really high risk to take it, but you could go in. It's one drive, two drives, right? So this could be the third drive going up one more time. So you could put your order in and put your stop on the yellow dot and let it go one more time. Come in here, just let's see if it's going to go. You can just go 100 and then you stop. Let's see, we got 100. You hit buy and you put your stop right on that yellow dot. So it's really close. So you got a very tiny risk. If it doesn't go, just get out. Don't give up all the money you just made. And if it does go, well, you're trailing again. Hey, making more money again. But if it stops you out, just get out with that tiny little loss and don't lose all the money you made. All right, guys, I'm going to let these run, and I'm going to let you guys finish out these trades. You can see how they're doing now. We finally caught some. We've gone way over class time. So I'm going to give you just a real quick little reminder that if you haven't picked up Track and Trade, this is where you go get it.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, and then also, of course, if you haven't picked up Pitt News Magazine yet.
Ready to level up your news game? Welcome to Pitt News Magazine, where stories come alive. Read it, hear it, or watch it in our YouTube classroom. Right now, get your first 2 issues for just $1. Yep, only $1. Don't love it? Cancel anytime before the $39 yearly fee kicks in. Try it out, risk-free. Satisfaction guaranteed, or your money back. Visit pitnews.com. That's pitnews.com, Pitt News Magazine. News your way.
All right, we just got stopped out on NVIDIA. Oh, no, we got stopped out on both of them. Both of them got hit. So we're out of the market on both of them. $487 is what we ended up with. Looks like something's still trading in there, so we'll have to go take a look at that. But so that's not a bad little run right there. We picked up a couple of runs. I think you got the idea. This is the basic structure. Now we're going to build on this and do much better, much more, and try and be a little bit more strategic about our entries and exits. And but I think you got the basic idea and the basic structure of what you're going to be doing. If you want to, this is of course the stock market. We're going to go over 1 o'clock tomorrow afternoon, another lab before our class. Our class is tomorrow evening, so we got one more lab. 1 o'clock in the afternoon, we're going to do the futures market, and we're going to trade the futures. Okay, and we'll show you the differences. We can do a whole lot more over there. Okay, you don't have all the rules. Okay, but it's going to be basically the same concept. And we will see you tomorrow, bright and early. Well, not bright and early, in the afternoon, 1 o'clock. So take care. See you then.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.